Okay, we're live. Welcome to the weekly roundup. I'm Scott. That's Ben, Hart Investment Group. January 12th, 2024. Still getting
Yes.
used to that 2024. I think I put a few 2023s on some documents this week. Just
No doubt.
saying. But yeah,
Yeah.
not too bad, but a few. It's hard to make the adjustment.
It takes a while for sure.
It does. But January's just ripping past here, eh? It's crazy.
Yeah, I think that extra holiday week for the kids and lots of government people made for a bit of a quieter week last week. And, this week felt like everyone was fired up. Lots to do this week.
Yeah, everybody's back. We are downtown Ottawa, both of us, as you can see Ben's background there. Lovely, just picturesque imagery behind you there. The Peace Tower as usual.
I
Full
don't know if
Canadian
anybody can
flag
see it.
waving. Brings a tear
Yeah.
to my eye.
Yeah. It's authentic
Lovely.
as well. It's not just
It
an
is.
image.
I know. Amazing.
Yeah.
All right, let's dive into it. So we said everybody was kind of back this week.
Yes.
Was the market back this week? What happened?
Oh yeah, it was back in a big way, just from an activity perspective. Volumes up and lots of people back. For following the dailies, you've been seeing that the Bitcoin ETF. Obviously, we've been talking about this for a couple of years now. So they finally. Well, first, what day is it today? I guess on Tuesday night, somebody hacked Twitter or X and said that they were launching and had approved the ETF, and then SEC came in and said they didn't and changed their mind. Then officially yesterday, the spot Bitcoin ETF was launched. So there was quite a bit of attention and things around this. We had a big open yesterday with crypto, a bit of a sell off today, but the biggest benefactor actually was Ethereum as opposed to Bitcoin out of this, where Ethereum's ripped and has held quite strong, up so kind of 11 and change year to date. So that, for the financial markets, there was a lot of attention associated with that. And I've thought and talked a lot about this, but fund flows matter, and so it's relevant now because the ETFs of the world is where a lot of the flows are going these days. And so I draw it to a bit of a comparison with Apple versus not Apple, excuse me, Amazon versus Alibaba. So if you look at Amazon, trades at kind of 60, 70 times earnings. Stock price is extremely high, close to its all-time high, Amazon, where Alibaba trades at 6 or 7 times earnings. No flows are going into China or the ETF. So, you get massive buying into Amazon, even though it's overvalued, and nothing into Alibaba. So as money flows into these ETFs, that's where you get kind of this normal buyer, which would be people investing in their 401ks and IRAs in the US.
Gotcha.
Yeah.
What else happened in this kind of first active week of back at it?
So the inflation news starting to come out, jobs again, numbers. That's really what the market's been following. The central banks have been fairly quiet, I guess. The biggest thing that always gets attention this time of year is Davos starts. I believe Sunday, so or Monday morning, I think, are the first meeting. So Davos is always the world leaders getting together and talking about what's going on in the world. So sometimes it's material, sometimes it's not, but oftentimes there's a lot of backroom conversations around what we're going to do going ahead. And we've had some big changes of direction with central banks in history when this has happened. So we'd be watching that right now, but our view is rates come down. And so, unless there's something materially that changes in the meetings, Davos would be grabbing a lot of attention.
Gotcha.
Yeah.
All right. You got a few slides for us here?
Yeah, I got a few. Get started.
Get them fired up here. There you go.
Working on building the deck out for annual presentation. I think we'll probably do it on the 31st. I just got to firm up some times and things like that. So, and so just trying to find some interesting pieces. And, as we sat a year ago and always look at this, but, it's always great to see what the analysts and forecasters are doing. And for the first time in, I guess, as long as I've worked in this business, they're forecasting negative growth for the markets. And so, as you know, their forecasts are typically wrong. It's always interesting to see, though, are they wrong too light on the downside, or are they wrong from the view that markets go a lot higher this year? If you look at their prediction for last year, kind of +4, that was certainly wrong. No matter what market you look at, market did quite a bit better than that. So I thought this was an interesting one. Always good to see where the analysts are thinking and what they're doing. So the other thing that's going to make a material difference for central banks is CPI. And so if we look at this is US CPI year over year, and then US core CPI. And why those two differentiate is because, particularly in the US, they care about core. In Canada, they call it something else. But in the US, they call core inflation, see what's happening. We've seen a slight uptick in inflation, which I think has caused the market to change from, when we got into December 31st last year, there's a 97% chance of a rate cut in March in the US. We saw some inflation prints a little bit better, a little bit hotter than expected, and that number is now down to somewhere around 70% probability of a rate cut in March in the US, and Canada's around there as well. But the big differentiator here is that the central bank cares about core inflation, and that continues to fall. So I follow what's happening, and I reference BABA at the start. I think that certainly the Chinese economic numbers are interesting and worth paying attention to. And so, this is China Growth Nowcast. And so this comes from one of the research providers we use. And it's really what's happening with China's growth. And as you know, it's slowed. Markets have already priced in a lot of that, I believe. But it tends to be a reasonable signal for what's coming to happen in Europe, and then in the United States, somewhere where between a 2 and 4 week lag is how this has been working the last number of years. So, that's the economic numbers. From a stock perspective, I think it provides opportunities that we'll continue to watch and say maybe it's worth investing and taking a bit more risk there. Last one, just before we talk about what's going on next week, is just a bit of a view around how CEOs of S&P 500 companies are rewarded. And so, I know we've had these conversations on and off, but as you can see, their salaries a little bit less than 7% of total comp, and stock rewards is really kind of the remainder of that. And so when you have all these share buybacks and all these things that you see popping up in the markets, the market tends to perceive that as a positive. Ultimately, it's a direct result of this. And so share count shrinking, then it's easy to drive your multiples because you have a certainty that share count's going down. So that's going to help your compensation. So not sure it's the right mix right now, but that's what it is, and that's why you get certain behavior, and it drives behavior to shrink share count for CEOs. On what's ahead, this is a snapshot of what's going on in the next week or so. And so this is I'd say the most relevant economic data that's coming next week. And so you'd see on Tuesday there for Canada, you get core CPI and consumer prices. And then as we get closer to the end of the week on Friday, there you'd see retail sales in Canada. In the US, so we look at the numbers, again, we get retail sales on Wednesday. We tend to always be a little bit later from that perspective. And then you get PMIs on Thursday. So this is kind of the economic data that can drive things. The last piece, which we didn't talk about at the outset, was just US banks have started to come out with their earnings. And so in the US, the banks are the first to report the earnings cycle, where in Canada, the banks will be the last. But right now, the US earnings cycle has started, and it started off in a negative direction so far. So that's it. That's it for the charts this week.
Jeez. Nice one. You kind of rolled in what's coming up next into the charts.
Yeah.
That's like a new thing for this year, I guess. Okay. Anything else coming up you want to note?
So I'd say, yeah, once we firm up the date for the annual presentation, that would be that'll come out next week with the times, firm up the times, and what's going on with that. We have our new associate Eva starting on Monday. So that's exciting news. There'll be more to come around that, and we'll introduce her on the show, of course, at some point. So from a business administration perspective, we're certainly happy to have Eva joining the team. From a market perspective, I think Davos is where there'll be potentially some interesting things. I always look through a lot of the presentations that are going on there, and so I'd be digging through and seeing what's happening at that event next week.
Right.
Yep.
Okay. Well, I guess that's it for this week, and thanks to everybody for joining, and we'll see you next week.
Sounds good. Thanks. Take care, everybody.